Hello and good morning friends, welcome to the CEC-UGC live lecture. Dear friends, as you know that from time to time we cater to your needs by introducing different subjects and under these subjects we talk on different topics. Dear friends, today, that is from today onwards, we are starting a very new series and this series on financial accounting. So for the students of financial accounting, this is a very good opportunity to understand all the basics and the fundamentals of this very topic, this very subject. So dear friends, as you know that we are starting it from today onwards. So this is an introductory lecture on financial accounting where we are going to understand about the basics of accounting, and for this we have with us in our studios Mr. M.C. Sharma. Mr. M.C. Sharma is Associate Professor in Department of Commerce, Shahid Bhagat Singh Evening College, University of Delhi. So I would like to welcome our guest Mr. M.C. Sharma, under whose guidance we are going to understand basics of accounting under the series Financial Accounting. So first of all, I would like to welcome our guest, Mr. M.C. Sharma. Mr. Sharma, welcome to the EDUCET lecture.
Thank you, madam. Accounting is one of the very important subject for commerce stream, and at professional courses, Bachelor of Business Administration, BBA or MBA, everybody has to study the accounting, because it has a very important role in management and control and planning. And as far as this subject is concerned, when the science stream students join any MBA course or any management course, so they have some doubts in their mind. Okay, it is a new subject, it is a very difficult subject, how they will learn. Today I will explain the basics of accounting and would like to assure all the people, although they are not from commerce stream, not from management stream, they can learn accounting very easily and can feel comfortable in the subject. Today's session's learning objectives are understanding meaning and nature of accounting, accounting as an information system, and users of accounting information means those parties which are interested in the accounting information, or we could say the stakeholders in business. Then what is the need of accounting and the objectives of accounting. Then we shall also discuss the bookkeeping term, which is confused with accounting, so relation with both. And then the different branches of accounting and advantages and limitations of accounting. So in this session we shall cover all this introduction to this subjects. And we would like to start with meaning of accounting. As far as the accounting is concerned, some people say accounting is the language of business and finance. Every business activity is recorded in accounting books. Every financial matter, financial transaction is to be recorded in terms of accounting, whether it is the personal finance, business finance or any other finance. So accounting has become the language of business and finance. So when we want to understand the business, when we want to understand the financial activities of any business, then we must know the accounting, we must understand the accounting. Accounting is an information system. This is very popular because in business many people are interested in the information, and this information is provided by the accounting, and this information helps the people in decision making. If a marketing manager wants to know that how much stock is available before getting the order, so he will ask the accounting person and he will tell how much stock is there, accounting books will tell. So accounting is a very important and it provides the very useful information. So accounting has become an information system. Even the IT people has a lot of job and which are based on accounting softwares. So accounting is an information system. Now what is accounting? So first we would like to see a definition. Then we shall explain it. Accounting is the science of recording and classifying business activities, business transactions and events, primarily of a financial character, and the art of making significant summaries, analysis and interpretations of those transactions and events and communicating the results to persons who must make decisions or form judgment. Now we shall explain this accounting definition. First part is that accounting as a science as well as an art. We know that the science has an organized body of knowledge and it is based on certain principles. So similarly, accounting is also based on certain principles which we apply while doing accounting job. Accounting is as an art. Accounting as an art is the application of knowledge, presentation of the accounting information in a useful manner, in a proper and significant manner, so the information becomes useful. Identifying the business transactions and events which are of financial character. We know that all business transactions and events are not recorded. Only those business transactions and events are recorded which are of financial character. And for that purpose, we need to know their financial characters. So the transactions are to be valued in terms of the money. If any transaction does not have any financial character, just for example, if there is a happening of theft attempt in a shop and the thief is not able to carry on some or steal some goods, so there is no loss to the firm. It means this is a transaction of non-financial character and it will not be recorded in accounting books. So we record only those transactions which are of financial character or which can be measured in terms of money or they have the value. So if sometimes the complete transaction may not be of financial character, so only that part will be recorded which is of financial character. So just for example, there is an inauguration of a shop or a business. So this is whatever the expenditure has been incurred on inauguration of the business or the firm or the shop, that part will be recorded, and the guest visited and all that, this non-financial information shall not be recorded in accounting books. So in accounting, first of all we need to identify those business transactions and events which are of financial character and those are to be recorded in accounting books. After identifying, we should like to measure them, what is their value of the transactions in terms of money. In terms of money means in terms of a currency of the country. Like in India, we record all business transactions in terms of the rupee. If a firm is situated in USA, so it will record all their financial accounting transactions in terms of the dollar. And if any company which is doing business in UK, United Kingdom, then it will record their transactions in terms of the pound. So all the transactions are recorded in terms of money. If any transaction cannot be measured in terms of money, like the help by a friend, it will not be recorded because it cannot be measured in terms of money. So after identifying the business transactions and events, we value them, measure them and express them. Then we do recording. Recording of business and accounting transactions is done in proper books of accounts. The first book which is used for the purpose of recording, that is called journal. Although transactions may be recorded by some people on a piece of paper, on their notebook, on their diary, this is also recording. but we do not call it recording in terms of accounting because it is not systematically and properly recorded. So, there are certain books of accounting, and the first book is called journal. And when a business is very large, many transactions are there, then it may not be possible to record efficiently all the transactions by one person in journal. In that case, we also add some books which are called subsidiary books, and in subsidiary books the specific type of transactions are recorded in the different books. Just for example, the cash transactions are recorded in cash book, credit purchase of goods is recorded in purchase book, credit sale of goods is recorded in sales book. If we have returned some goods due to any reason to our suppliers, then it will be recorded in purchase return book. If any of our customer who has purchased the goods from us and he has returned the goods to us due to any reason, then it will be recorded in sales return book. There are some other books also. One is bills receivable book, which is used to record the transactions relating to bill of exchange receivable from others. There is another book, bills payable book. In bills payable book, we record the bill of exchange which we have accepted as an obligation or as a liability. So, they are payable by us. So, we record in bills payable book. If any transaction which cannot be recorded in any subsidiary book like cash book, purchase book, sales book, then it will be recorded in journal or journal proper. But maintaining all these books is not compulsory for all. Journal is compulsory. It depends upon the volume of the business. If volume of business is very big and there are many transactions of credit purchase and credit sale, only then the firm needs to maintain purchase book and sales book. A very small firm can record all their transactions in journal also. So, but normally the small firms maintain cash book and journal, which is sufficient for them to record all the transactions. While recording these transactions, we need to remember that there are certain rules for recording, and these rules are known as the rules of journalizing or rules of debit and credit, which we shall discuss in detail in the next coming series. So, the first part is the recording of transactions. After recording the transaction, we need to maintain another book that is called ledger accounts. While recording journal, I would like to remind some points that all transactions are recorded in orderly manner, that is the date wise and under proper headings. These headings are technically called account titles. Like purchase of goods shall be recorded in purchase account, sales of goods shall be recorded in sales account, all transactions relating to Mr. Ram shall be recorded in Ram's account, all transactions relating to bank, that will be entry will be passed through the bank accounts. So, all the recording in journal is made through different accounts which are affected by the particular business transaction or event. And we need to follow the rules as I have already explained, and these rules are based on some accounting principles and which we shall explain in the next series in detail. Now, journal provides all recording of transactions, but we know that accounting is an information system. And just for example, the owner or the manager of a firm asks his accounts assistant or accountant to present the bank balance on a particular time. So, if the transactions are recorded only in journal and no any other process has been taken, then he will not be able to tell the information. So, the second step after recording is classifying. In this second step, the transactions are recorded, those transactions which are recorded in journal or any other book of original entry are classified into various accounts. That is called secondary book, or it is also called ledger. For example, in ledger the different accounts are created, like on the different page or folios, like bank account, and on that folio all transactions relating to bank transactions shall be recorded. Similarly, there will be a separate folio for purchase account in which we shall record all transactions relating to purchase of goods. If we have created a salaries account, then all transactions relating to salaries payment or due shall be recorded in the salaries account. So, the ledger is a classified book where we could find a detail relating to particular item of income or expenditure or asset. So, this classifying is done into the journal. So, in accounting process, first we do identifying, then we measure in terms of money or value, then we record them into journal, and after recording we classify them into secondary book, which is called ledger. After classifying, the next step is summarizing. This summarizing is based on the basically those transactions which are recorded in ledger. Again, I would like to tell you that as accounting is an information system and the owner wants the list of debtors. The list of debtors, that how much amount the firm has to collect on a particular date from their customers. So, if the accountant present before him the ledger, okay, sir, you can check from this, then he has to go through the different all ledger accounts, but he needs the summarized or the only the accounts and amount due on a particular date. So, after classifying, the accountant has to do the next step summarizing, and which is in the form of the trial balance. Trial balance is a list of all ledger accounts with their balances on a particular date. So, with the help of this trial balance, the owner or the manager can know the balances of the different accounts on on particular date. And this format is understandable and useful for the various information users. If we want to know the list of creditors, we could find out from the trial balance, and this summary is very much helpful in providing useful information in the summarized form. This is only the first process in summary, a trial balance, but the other important summary statements are income statement, that is also called trading and profit and loss account, and another is position statement, that is called balance sheet. After preparing trial balance, at the end of the year or end of the any accounting period, which may be a quarter, half year or year, we need to prepare these two statements. We all know that the basic objective of business is to earn the profit, and any owner would like to know how much profit they have earned during the last accounting period. So, for that purpose, this income statement, which is also called trading and profit and loss account, is to be prepared. and managers can also evaluate their performance in terms of the profits, how they are working. Another statement that is called position statement or balance sheet. Position statement basically explains the financial position of the business or the firm on a particular date. Financial position statement includes the two important aspects. One is the assets, that how much assets are owned by the business or the firm. Different type of assets are recorded, and another side of this position statement is the capital and liabilities, that how they have been financed, means the sources of funds. Funds are proprietary by the owners in the form of capital, in case of company in the form of share capital. Funds are also borrowed in the form of the loans from banks and financial institutions, and there may be certain other loans, the credit purchase from suppliers, outstanding expenses, these liabilities. So, on a particular date, by seeing the balance sheet, the information user can know the financial position of the firm. So, in this accounting process, the first identifying, then measuring, then recording, then classifying, then summarizing. This is an accounting part which completes to provide the accounting information. But we must know that this accounting is not only recording and showing the information. The most important part of accounting is analysis and interpretation. Analyzing the accounting information. Analysis of interpretation is basically deals with what has happened in the business. How much sale, how much purchase, how much goods sold, how much goods unsold. So, what has happened in the business? And if the owner or information user or the management wants to know the reason behind that or detail behind that, then why it has happened, so some details the accountant has to explain. So, accountant will be able to explain by analyzing the information only. Then what is likely to happen in future? On the basis of accounting information, some certain future transactions are also explained. For example, the salary for the month of March has not been paid by the firm. It shall be reflected as outstanding salaries or in the balance sheet as a liability. So, it is reflecting that what is going to happen in future, means in future the firm has to pay this much amount, a specified amount of salary to their employees in the coming month. So, financial statements, this is trading and profit and loss account and balance sheet, they are analyzed by accountant and they are interpreted also in different terms. Interpretation means trying to know the different information which can help in decision making. For example, a management has to make arrangement for the funds regarding future liability, then he can analyze and interpret the balance sheet, their liabilities, current liabilities which are payable within 1 year and other long term liabilities. Nowadays, in financial statements, one new financial statement has also been added, that is the cash flow statement, particularly in case of the corporate organizations. All annual reports includes income statement, balance sheet and cash flow statement. So, this information provided by the accounting or accountant is to be analyzed and interpreted, and this is very much helpful. But if accountant has recorded the transaction presented financial statements, they have no, if they are not informed to the different users of information, then people will not be able to know what is happening in the business, what is happening in the company, what is happening in this firm, and they may have some misconceptions about the business. So, they must be communicated. So, one of the important part, this transmission of accounting information to various users, and these users shall be able to get the information and to make their own decisions on the basis of accounting information. This communication is done to different users of the information. So, we would like to discuss the different users also. Most important user is the owner, because owner have invested their money in the business, and they are always interested in knowing the safety about their capital, their profits, what is the position. So, the owners and shareholders, in case of the partnership firm, the owners are partners. So, all these owners are interested in the accounting information, okay, what is happening in their business, whether they are earning profit or incurring losses. If earning profit, then how much. If less profit earning, then they would like to get analyzed, okay, why their profits are less. If the firm has incurred loss, then they would like to know from the accountant, okay, what are the causes of incurring losses, whether cost is high, expenses are high, or sales are low, or prices has come down, all these information. So, the owners and shareholders are the most important information user of accounting information. We know that in business the credit transactions are very common, and the suppliers who sells goods to a firm on credit basis, they are called creditors. So, these creditors or suppliers are also interested in the accounting information of a firm, because when the goods are sold by them on credit basis, then they would like to know the track record of the firm of the company. Okay, normally in how many days the company is paying their liabilities. So, they will get their money on the promised date or not. So, the creditors and suppliers are interested in financial position of the firm. If financial position of the firm is good, then creditors and suppliers will be willing to sell their goods on credit basis to the firm. And if the firm is earning profit, then it is expected that the firm will be in a good position to repay the price of the goods supplied by them on a promised date. So, the creditors and suppliers are also interested. We know that nowadays the investment at business has become very high, and a person may not be able to invest all the money from their own sources. So, they have to borrow from banks and other financial institutions and the lenders to start their business, or to expand their business, or to diversify their business. So, bankers and lenders are again stakeholders in a firm. The banks has to evaluate the position of the firm, liquidity position, financial position, whether the loan which is given to a particular firm is safe or not, what are the assets which can be used by the banks to realize their loan amount if there is any defaulter. So, the bankers or lenders are again, they are the important information users. In this reference, I would like to explain one example. Recently, the Kingfisher Airlines, which became defaulter, and the money of the many banks and financial institutions has been stuck. And recently, the orders are given to auction the assets of Kingfisher Airlines to realize their debt. So, it is also analyzed by the financial expert. There has been some fault on the part of the lenders while analyzing this accounting information of the firm. So, the bankers and lenders, banks have the public money and they must lend very cautiously. So, they have to analyze the financial statements of a firm properly before granting them any loan or reimbursing any loan. So the bankers and lenders are interested. Then employees and trade union. We know that the employees are very closely related with a firm because they get the salary from the firm, and many times they think their salary should be increased, they should be given some bonus. So before asking for this increase in salary or the bonus or any other facilities by employees or their trade union, on what basis they will claim or demand this? So they may also be interested in the financial statements of the firm. They may ask the company, if a company is earning the good profits, when you are earning a good profit and they know that the profits are earned, the employee's contribution is very important in earnings of a firm. So they also claim that a part of the profit should be given to them in the form of the bonus or in any other benefits. So the employees and trade unions are also regularly studying and analyzing the financial statements of a company. Now the management. Nowadays when the businesses are very big, owners themselves may not be the manager, professional managers are hired, and management has to take many decisions relating to day-to-day management of the firm and also taking some other crucial decisions regarding expansion, diversification, discontinuing a product. For all these decisions, the management need information. Before granting a discount, a marketing manager would like to know how much profits are there while selling in a particular product and how much discount they can allow to some customer. So the management again their all decisions are based on accounting information. So management needs to analyze and interpret this information. And it is not necessary that the management shall wait for the accounting information for the year. They may ask the accountant anytime whenever they need any information to take their decision, to prepare budget, to make a planning. Then when companies are there, a lot of companies, as we know on NSE, BSE, thousands of companies are listed. And many people invest their money in the form of the equity shares or in the preference shares of the company or the debentures. These are called investors. If any investor wants to invest their savings or the money, their hard-earned savings, then they should take a decision whether the investment in a particular company shall be safe, they will get a reasonable or expected return from that. So all these potential investors also study, analyze and interpret the accounting information provided by the company. So again these are, then the government, taxation authorities. If government is going to make a policy relating to a particular type of business, then before making any decision they would like to study the financial position, consolidated financial position of that particular firm. If sugar industry is facing some problem, incurring losses, they need the money for modernization, so the government authorities would like to study all the accounts of sugar companies. Similarly, the taxation authority, which is also a part of the government, they are also interested in accounting information to know whether the companies are paying their taxes honestly or not. The tax liability is shown by a firm is the same. Income tax authorities are there, sales tax and VAT and custom and excise duty, and so the different tax authorities, whenever they have any doubt, they ask the firm and companies to present their financial statements or accounting books to check whether they are paying their tax liabilities honestly or not. So these are the different users of accounting information. Although nowadays some other stakeholders, the society as the NGO, have also become interested in the financial statements of various firms. how much profit they are earning, they are not exploiting the consumers, they are not making the very high profit at the cost of the society or environment. So, they may be the other information users also, but all these information users which I have explained are the most important. As we told you that accounting is an information system. Accounting as an information system, any system has the three parts: input, process and output. Accounting has inputs as the business transactions and events which are recorded in accounting system, and process is recording, classifying and summarizing, and the output comes in the form of the trial balance, income statement, balance sheet and some other financial statements. These statements are in the form of the output which is required by a business organization. So, accounting works as an information system, and nowadays technology has been used in accounting. We know that different accounting softwares are there, and we would like to take the example of the banks. Now, a deposit holder, whether saving bank holder, deposit account holder or the current account holder, he can withdraw money from any ATM from their account. So, it has been possible with the help of the technology which is based on this accounting as information system. In that system all information is available. So, the people are using the technology with the accounting, and it has also played a very important role. So, accounting is a information system which provides information, and we know that accounting system should be very efficient and accurate. Efficient system means whenever the information is required, it must be available, and this is the particular reason that the technology has been used in the accounting. As soon as you withdraw money from the ATM, within seconds or minutes you get SMS that the money has been withdrawn from your account. So, it shows that how efficient is accounting system of the banks. So, any firm must have the efficient accounting system, so it provides timely information and all useful and required information. If the information has not been provided timely to the different information users, it means the accounting system is not working well. And so, this accounting we know that has very important. Now, we would like to know some aspects relating to the objectives or needs of accounting. We know that suppose if one person says I can manage without recording the business transactions. Nowadays it is not possible because a large number of business transactions are there and memory of a person is very limited, and so they must have a record and not record, systematic record of business transactions. So, all relevant information, all required information can be presented to the information user immediately or timely. So, the basic objective of accounting is to maintain systematic record of business transactions, and we also already explained that only those business transactions which are of financial nature or financial character. Then another objective is to ascertain the profit or loss of the business. We know that the basic objective of business is to earn the profit. In this point, we would like to explain that although non-government organizations, NGOs, their basic objective is not to earn the profit, but they may have the surplus or deficit, and any organization would like to know that they have the surplus or shortage of the deficiency or deficit in their income. So, accordingly they can manage their funds. So, every organization, business organization need to calculate profit or loss, and non-profit organization needs to know the surplus of their revenue over expenditure, income over expenditure, or deficit, that is the expenditures are more than income. Then a detailed analysis of revenue and expenses, from where they are getting their revenue or the incomes. A business may have the different type of the business activities, like a furniture selling company, manufacturing company may have the furniture, wooden furniture, plastic furniture, iron furniture. So, the management or the owner would like to know whether which segment is giving them the more income, whether the wooden furniture, steel furniture, plastic furniture. So, the detailed analysis is presented through accounting information. So, another important objective is to provide source of the revenues or the items of expenses. Because if we tell a person that the firm has incurred loss, then he would like to know, analyze them in detail. Loss means expenses are more than income. Then we would like to detailed analysis of expenses, that on which items the firm has incurred expenses and which are controllable, which can be reduced in future, so that their loss can be minimized or the firm may earn the profit. So, for that purpose the information is required. Owners and different users we know are interested in the financial position of the firm or the business. That financial position is based on the balance sheet or which shows the assets owned by the firm and capital and liabilities shown by the firm. In this, only these two statements does not fill all purpose, because I know that one small firm owner discussed me his problem, that they are earning profit, but sir, there is a shortage of cash. They are facing financial liquidity problem. They do not have the cash to pay the salary sometimes, to pay their suppliers sometimes. So, to solve this problem, the accountant has to prepare a statement which is known as cash flow statement. This cash flow statement explains the different sources of cash or funds during a given period and how that cash has been used or utilized in purchasing fixed assets or in operating business or in paying interest or repayment the loan. So, this cash flow statement helps the owner or the management to understand their cash position. If it is a shortage, then how it can be managed. Then communicating financial information. As we know that all different parties are interested in knowing the information, including the government. So, one of the objective is to communicate the information. Maintaining accounts is also a legal requirement. Under the Income Tax Act, the certain firms which have the sales or turnover exceeding a limit, their accounts must be audited. It means they have to prepare the accounts and they must be audited by the auditors, which are the chartered accountants. They verify that the accounts prepared as per information are true and fair. In Companies Act also, all the companies are required to maintain the accounts. Cooperative organizations, which they also do the business, they are also required to submit a copy of their financial statements to the registrar of cooperative societies. So, there are different legal requirements of maintaining and presenting this information. Like taxation authorities, they may also ask the maintaining accounts is compulsory. So, these are some important objectives, or we can say the need to maintain the accounting. This accounting is also a very important tool in helping the management and control of the business. As far as the management and control of the business is concerned, the owner and management has to take many decisions, and those decisions shall be based on accounting information. If we want to control the expenditure, if we want to control for example the conveyance expenditure, so we would like to know that how much conveyance has been paid to the different persons or the employees of the organization. So by analyzing we can see their logic, where they can be cut or not, control. So the one of the objective is to help the management and control of the business. If a marketing manager which is authorized to sell the goods on credit basis and collect the money from the customers, whether he is collecting money on right time or we can say the efficiently working, we can check this on the basis of accounting information. Accounting information, that is about the debtors and credit sales. After relating to both, we could know whether the money has been collected from the customers on time or it has been delayed. So we could know whether the marketing manager or the recovery manager are working properly or not. Nowadays, to do the business properly when a time of the competition, we need to do some research about our business operations regarding expenditure, regarding cost, regarding sales, regarding other different items, utilization of resources, and all these research will be based on information, and this information is provided by this accounting system. So one of the objective of accounting is to provide this information. There is one term, bookkeeping. This bookkeeping is confused with accounting, although both are interrelated. Bookkeeping is basically the part of accounting. Bookkeeping is concerned with recording and classifying the business transactions in a systematic manner. So it includes recording the transactions in journal or in subsidiary books and posting them into ledger and balancing of accounts. So this is the initial steps in accounting, and this work is done by the clerk, and clerks are in many offices nowadays called accounts assistant. So bookkeeping is not accounting, bookkeeping is the part of accounting. The bookkeeping and accounting, so the basic objective of bookkeeping is to prepare journal and subsidiary books and ledgers, while the main objective of accounting is to prepare, analyze and interpret financial statements and to communicate it to the different users. As far as the scope is concerned, the scope of bookkeeping is limited to recording and classifying business transactions, while the scope of accounting is very wide. And the accounting people are very important. Any person who want to go in the management field, particularly in finance, they are expected to have a complete knowledge of accounting. So this scope of accounting is very wide. Level of knowledge, a bookkeeper or the clerk is required to have a basic knowledge to record the routine business transactions and events, while the accounting requires a higher level of knowledge, conceptual understanding and analytical skill, so that he can analyze financial statements and interpret them for the purpose of different decision making. As far as the results and financial position of the business is concerned, bookkeeping does not show the results and financial position, it shows only the detailed results of the different accounts, while accounting shows the results of business and also its financial position, which is reflected in the form of the balance sheet. Now we would like to know the different branches of accounting which are interrelated. So far we have been discussing, this is financial accounting. Financial accounting is concerned with financial aspect of the business, recording all business transactions and events which are of financial nature, classifying them, summarizing and preparing financial statements. So, the financial statements express every information in terms of money, financial part, and communicating this information to the different users. And accounting initially started with this financial aspect, but with the time when the manufacturing organizations also need some information relating to the cost, so then another branch emerged, that is the cost accounting. It is the branch which deals with recording cost, and the basic objective of cost accounting is cost ascertainment, cost reduction and cost control. Cost ascertainment is very important for a business because it helps in different decision makings. We know that the pricing decision is cost plus profit. This is commonly used by the management. So, before deciding the price of a product, a marketing manager or a manager would like to know what is the cost of the goods manufactured or services rendered. So, the ascertaining cost is very important. For that purpose, the cost accounting helps. They record different expenditures, prepare different statements, cost statement, and prepare the reports. So, the cost ascertainment is very important. Then we know that some people may have the target of that how much cost should be of our product. So, they would like to control the cost up to the prescribed level. So, that prescribed level, so they must know the actual cost, then they can compare with their budgeted cost or a standard cost, and only then they can try where the costs are higher. So, the cost accounting helps in controlling the cost. Then we know that the basic objective of business is to earn profit, and when so much competition in the market, a firm may not be able to increase their prices of the product. Now, the question arises how they can increase their profit. So, the alternate way is available is reducing the cost. It means that they must maintain the cost records, know the cost and see the potential that where the cost can be reduced through the different methods. So, the cost accounting is another branch which has taken place, and another associated branch is the management accounting. This management accounting represents the accounting information which is provided by financial accounting and cost accounting in such a way that enable management to discharge their functions effectively and efficiently. And management basic function is decision making. So, when they need to take any decision, they get the information from financial and cost accountant in a proper presentation manner which help them in decision making. And nowadays these two branches has become, cost accounting and management accounting, very important. So, specialized courses are available for that. In our country, we have the Institute of Cost and Management Accountants of India, ICMA, which provides a course, CMA, Cost and Management Accounting. Because in manufacturing organizations particularly, the cost accounting is very important and relevant. Management accounting is relevant for all the organizations, but it is related, so they are different aspects. So, the cost and management accounting is the two important branches. This management accounting provides financial information as well as non-financial information also, and it may be futuristic, means it helps in predicting some future events, future budgets, preparing the budgets like the budgeting is the part of management accounting. So it helps there in preparing budget for the coming time and decision makings. Now some other branches are also have been evolved, and this one of the branch is the tax accounting. Financial accounts are prepared by the accountant on the basis of accounting principles, but there may be certain rules which have been specified by taxation authorities while calculating the tax liabilities. So those may be slightly different from the financial statements prepared. For that purpose, the accountant has to prepare and calculate the tax liability as per the provisions of the taxation rules and authorities. So tax accounting is a branch of accounting which ascertains the tax liabilities so that they can tell or present their accounts with taxation authorities. Now the social responsibility of business has also taken place, and now it is very topic of hot discussion. And so the companies are also interested to disclose that how they are providing social benefits to the society, how much cost they are incurring. So their business is contributing something to the society, so that the social responsibility accounting aspect has evolved. As we know, in financial accounting, human resources are not recorded because they are non-financial nature. But human resources are one of the very important part of accounting of a firm, which plays a very important role. By knowing about the management of a company, we could know that the company will perform in what manner. So the human resources accounting branch has also evolved. It is concerned with the human resources, recording the human aspect of the firm, and how the different employees are contributing, what is their potential, abilities and experience. So that also helps in analyzing and interpreting the firm. National accounting, which is particularly used for the resources and economic activities of a nation. National income, that GDP we normally know, the gross domestic product, it is calculated on the basis of national accounting. Another branch, the green accounting, has been evolving. This green accounting considers the environmental cost, because the society is very much concerned how the business is affecting the environment. So how it is contributing in environment development or maintaining, or it is damaging this environment. So the recording that aspect of business has become a part of the green accounting.
So as we have very short time left over here, I hope that all the students who might have watched this lecture and would be benefiting from YouTube, as we are going to upload this lecture on YouTube very soon. Dear friends, if you want to give your feedback regarding this particular lecture, then you can mail us at info.cc@nic.in. We would be meeting again and would be discussing on another aspects of financial accounting very soon. Till then, take care. Goodbye. Thank you, sir. Thank you so very much.
Okay.